Sezzle, the BNPL firm that is running laps around the market right now, is reporting earnings on Wednesday, and you are definitely not going to want to miss out on the earnings for this company. Remember, none of my content is financial advice, and check all facts. Sezzle is competing with all the big players in the space like Affirm, PayPal, and Klarna. To even warrant investment, differentiation is key, and Sezzle is exactly that. Sezzle's model is the most successful because of their subscription-based model, the only model that can bring the astronomical returns that it's been achieving. The $13.99 per month Sezzle Premium subscription and the $19.99 per month Sezzle Anywhere sub have allowed to bring the near 28% net margin that we saw in Q2. The innovative team behind Sezzle is quite exemplary, since not only have these subscriptions brought in extremely strong cash flows, but their innovations have allowed them to prosper as well. Sezzle On Demand has brought immense growth to the platform. As we see in the annual report, On Demand brought $27.8 million in from the total $98.7 million in revenue. The team is constantly finding new ways to create value for the company. For Sezzle Premium Anywhere, the growth has been steady in comparison to transaction income that has been soaring since On Demand has been offered. The explosive growth coming from other sources is brought from the standardization of fees. While there are other big players out there in the BNPL space, none of them have found how to be profitable quite like Sezzle has. Even Klarna, the viral player due to its recent IPO, still proves unprofitable. I feel comfortable knowing that Sezzle has innovated to a model where profitability is possible. What shocks me is how much the consumers like the product, as Sezzle has a Net Promoter Score of 75. In fact, all BNPLs have these high Net Promoter Scores in the credit market, marking why they have been taking shares from the market from the other credit businesses. I am surprised with how well Sezzle is received, since you need to get a subscription to use their product, or you need to take on interest. But it makes sense, as the Sezzle environment is very integrated, and you can just pull out your Sezzle card and scan. One of the most important metrics for Sezzle is going to be their GMV, which stands for Gross Merchandising Volume. It allows us to see how much was purchased using Sezzle offerings, and that number was $926 million for Q2 '25, an increase of 74.2% from that $532 million in Q2 '24. This simultaneously is showing the traction the company is getting from On Demand, as well as the customer stickiness and their want to continue using the product. The take rate of the company was 2.5% in Q2 '25 and 3.5% of the $532 million generated in 2024. The cash position of the company was almost $90 million, plus the $10.5 restricted cash held by their variable interest entity, which has been using their revolving credit line. This cash pile continues to build, which may help protect the company from mass defaulting. Their line of credit was at $131 million. One of the fears for the business are always the large allowances for credit losses they have. $20 million was charged from the $98 million of revenue for credit losses. As the age profile is lower for this company, this may be expected, but is nonetheless concerning. If you want to learn more about the company, I have my Substack linked in the description. It holds some views that I no longer hold anymore, but all the facts are still good. So if you want to go take a look at that, it's linked in the description. Thank you for watching. Make sure to subscribe.